Okay, so there you go. Good to see you guys. Thank you for joining in today's live geometric market outlook webinar. It's going on live on the live market, so you could see the charts all with live prices. And today is the 24th of February 2017. So let me just read this risk warning very quickly before we start, and you can see my chart. So Forex and CFDs are leveraged products and involve a high level of risk and can result in the loss of all your invested capital. Therefore, Forex and CFDs may not be suitable for all investors. You should not risk more than you are prepared to lose. Before deciding to trade, please ensure you understand the risk involved and take into account your level of experience. Seek independent advice if necessary. So that's it. That's a risk warning. And we shall then go onto the chart. But just before that, I'd like to share with you the livecharts.co.uk. It's a very nice currency strength meter here for those of you guys who are new to this session or new to the currency strength meter. It's sort of like a Forex heat map kind of thing, and you can see that very simply. I like using this because it is easy to understand. So you could see that the lowest bar, this is based on like a 1 hour chart, so it's not really long term or even medium term. It's more like what's going on between now right up to about an hour or 2 hours time, that kind of market outlook for you to see which currency is strongest, weakening or strengthening. So here we've got an idea that GBP, AUD, and CAD, as you can see, they are on the weak side, and then you've got all the full bars. They are on the strengthening or strong pairs or strong currencies. Sorry, so you've got JPY, you've got CHF, and you've got the euro on the upside. So if it's more JPY and CHF, then you could see that that can be actually combined with the weakening or weak currencies like the GBP, the AUD, and the CAD. Okay, so here we've got the downside bearishness, GBP, CAD, AUD. And what we do next is we need to also have a bit of an idea what's going on with the market in general, with other pairs, with stocks as well, just a little bit here and there so that you get an idea of what are the dominant bulls and bears. Okay, so here, for example, on the first one here, I like using 0h talking forex. You can always type 0h talkingforex.com or Talking Forex, sorry, on Google, and you'll get this very nice piece of information where it gets updated every couple of minutes. It's a team of research being stationed in the UK, and they come up with daily researches and they release this kind of news. So anything that would be relevant to the forex market, mainly for currencies, as well as gold and silver, you'll get that coming up like this. So here, for example, it's London time here, 12:46. And it says here, risk driving FX today. It is talking about the USD JPY finding key support. So it is on its way down. So we need to be aware of the support level as it's indicated here. So here, for example, it says that Euro USD, for example, pushing up through the 1.0600 area. Cable follows higher, and a couple of other things. So this is just to give you a bit of an idea. Here, for example, with UOB Bank, we have got, I usually go onto efxnews.com and I look for clear indicators, meaning the keywords needs to be either bullish or bearish. Here we could see that the only one that has a clear sort of information, because the rest has got the heading that reads neutral, and all that. The only one that has got a little bit more conviction in terms of its reading or its signals is the AUD USD, saying that it's bullish to take half profit at 0.7775. So what I usually do then is not to straight away go onto my chart and open trades, but to confirm what I see on the charts in terms of patterns and comply that to what I read in the outside news, so that we get a bit of an idea. But we need to always go onto the chart and look at the trend side of it, which I will do so very shortly. Here is Credit Suisse, for example, and we have got some ideas here. Let's say, for example, for GBP, for AUD USD, it looks like it's giving a bit of an idea of the price there, and then you've got the rest as well. GBP USD, for example, it says has broken its near-term range higher to target this one here. So I get all these prices that the banks are looking at in terms of its direction and target, and then I look at whether or not it would mirror with what I could see in terms of trend as well as target following the geometric patterns. Okay, so here we've got another signal here. This one here is quite popular by Maybank. Okay, so the guys who are in Malaysia are very familiar with Maybank, or in Singapore. And you've got them also talking a little bit about GBP USD, for example. It's talking about upside risk as well. So we've got three banks now that I've shown you just very quickly, giving you hints to the upside for the GBP USD. It says that it rebounded amid the pullback, and then it says last seen at this level here, 1.2540, and then here it says sustained close above. It says that support remains at 1.24 area. Okay, support remains there. So if it's on its way down, it will find its way up or bounce upwards at a 124 area. So we've got banks talking a lot about this level here, 1.24. 1.2400 is a psychological level. We'll go into support resistance in a while and give you a bit of an idea what's coming, coming for the GBP USD, the majors basically, Euro USD as well, a couple of others. And with political risk coming up in Europe, we expect GBP longs to be favored over the Euro. So this is giving you an idea as well that the GBP is favored to the upside, bullishness. And if you combine the Euro and the GBP, that means you are selling the Euro and you are buying the GBP. Okay, because GBP is on the upside. So this is basically it. So let's go on to the chart at this moment of time. Before we go on to GBP USD, I'll just show you a little bit on what we've talked a lot about since last week on clock angle and the EMAs, because I want to use live examples so you get an idea of what I'm talking about when you want to look at trend. Okay, so you would need to always cluster the trend into 3 time frames. Okay, it's always best for you. Let's say I'm focusing on the 1 hour, the 4 hour, and the daily. All 3 needs to match. Okay, needs to match and give you one direction. And how do we know the direction? We know the direction by applying the simple, the 3 lines, the 3 average, the moving averages. I use the exponential moving average of 50, 100, and 200. Okay, so you apply that and you look at these 3 time frames and you start off with the 1 hour time frame first, and what you do then is you zoom out totally and you look at all this angle. Now here, for example, in the 1 hour chart, we are using the Dow Jones just as an example. Okay, and you're looking at the Dow Jones giving you a very nice angle. We call it a 1 o'clock type angle. If you use this like the hand of the clock or the hand of your watch, you could see that this angle here is trading like 1 o'clock-ish. Okay, that means it's strong to the upside, and we have got prices coming downwards now, and it's touching this line. Now what usually happens is if the prices or the candles like this one here are inside these 3 lines, that means it's starting to show a bit of uncertainty. So we usually don't enter trades or trade when prices are piercing through the lines or trading in between all these 3 lines. They need to be above all 3 lines or under all 3 lines to give you a clear indication of trend. This is based on the 1 hour chart. So if you've got most of the candles above all 3 lines like this, and all 3 lines are separated from each other, giving you a clear direction upwards like these 3 lines here during this time, for example, that means it's showing you the uptrend. Okay, but here it's under all 3 lines and giving you the indication of a downtrend. Okay, like this one here, all under all 3 lines. So here on the 1 hour chart, it's becoming a bit uncertain, even though you've got candles going down. But what you want to do now is you want to determine the trend. So in determining the trend, you need to go on to the 1 hour, let's say 4 hour, and the daily. Now here you could see that prices or the candles are still above all 3 lines, and all 3 lines are pointing upwards as well. So this is still giving you some form of indication that there is still an uptrend for that instrument that you are looking at, even though you've got candles coming down. Because what usually traders do is when they look at the candles and they see that the strength of the candles are coming downwards or upwards, bullish or bearish, they start buying or selling according to the candles, and that is a very, very risky thing. So you would need to look at it at a how do you call that, overall picture, okay, a market outlook on the overall picture. That is a very, very important part of analyzing the market at the very beginning. So here itself, you've got candles still above, and if I go onto the daily chart, I can see that candles are above all three lines here, and the three lines are really showing upwards, and you've got candles quite far away from three lines. So here I can safely say that it is quite a strong upward trend overall, okay, even though the 1 hour, it's not really what do you call that, giving you an indication, because the candle has pierced through and gone inside the three lines. That's not a good thing. But overall, on a long term, when you cluster up or group up three time frames, you've got 1 hour, 4 hour, and daily, what you're looking at really is the 1 hour being your short term, your 4 hour being your medium, and your daily being your long term. Okay, so now let's get into an example of a pair that you would be trading. Let's say for the GBP USD on the 1 hour chart, you need to first go like that. Okay, you zoom out totally, and when you zoom out, you look at it, you look at the most recent prices cluster of candles that is the most obvious here. Now here itself, you can see that you've got the whole price is zigzagging in within this range, and this is called a 3 o'clock angle. And this 3 o'clock angle is talking about how prices or investors are maybe either in a confusion mode, not certain or uncertain, or holding on to their trades or holding off trades, just waiting for it to actually break out above or break out under. So this is range trading. There are still people who are trading in the range, and hence the reason when you are trading in the range in a 3 o'clock angle, because the market is confused, you will be looking at your trades being in a confusion mode as well. Okay, you see it up and down in profit and things like that, because you've got the candles going up and down because they are traveling in within the range of 3 o'clock angle. Okay, so this is not a very clear trend indicator, meaning that if it's in a 3 o'clock angle, usually we stay out of it because the market is in doubt. When the market is in doubt, you are supposedly to stay out of it. Okay, so here, when we do this, for example, you can see that you've got this whole area here. You could draw a very nice sort of trend, not trend, but support resistance zone. And how do I draw a support resistance zone? You can look at the prices now, for example, and it's being challenged, for example, to go up by all these resistant candle here. All you need to do is look for the highest body, okay, and the highest wick. All right, and then this below, for example, you could do the same for the prices below, or the level below, and you do that by looking at the lowest body and then the longest or the lowest wick there. So you've got a zone now. Now this is what's going on. You've got prices for GBP USD trapped in within this channel, horizontal channel here. So traders, if they are trading or you have your trades open, what you're really doing is you're trading in within the range. You're range trading at the moment. And when you range trade, it's a bit annoying sometimes, or frustrating, not seeing price taking off and not seeing your greens multiplying, your profits multiplying steadily. The reason for that is because of this zigzagging of prices horizontally. So you would need to wait till prices go either above, shoot up, or shoot out downwards. If it does, sometime what happens, if it goes up, it might come back down a little bit to this range and then go up even further. That's the same that goes in this area, go up a little bit and then all the way down even more. So we are waiting for that breakout within this range at this moment of time. Now let's look at the price. The price is telling you a lot. Price action itself. Look at price action. GBP USD on the 1 hour chart now at this moment of time, it's trading at 1.25, yeah, 48. Okay, let's say for now. And it's got 5 decimals here. I'll just turn that into 4 decimal places. Now look at the last 2 digits of the price. Okay, the last 2 digits of the price, 48. is really close to one of the psychological number, which is the 50 psychological number. You've got 4 sets of psychological number. We're talking about just the last 2 digits. You've got 00, okay, you've got 20. It's not in order, but just remember these ones: 00, 20, you've got 50, and you've got 80. Okay, so this is where the problem is. You've got prices playing in within this area here, but not only this area is playing in within or very, very close to the psychological level of 50 here. Okay, so it is playing very close to the psychological of 50. So what you need to do is convert the price here to the closest psychological number here. So that would then give you the price of 1.2550. You need to look at this price. So what you need to do is pay attention to 1.2550, because 48 is very close to the 50 side number. So if you want to know whether or not prices will continue upwards or downwards, it needs to break out and go above 50 first. Okay, if it had gone above 50 by 10 pips, let's say 60, all right, then you've got more chances to go upwards. Okay, that means that the bulls are beginning to dominate, and as soon as it goes on to 60, it goes 60, 65, 70, it goes upwards and upwards. They've got more chances to think of the market being bullish or trying to pick up on the bulls orders, okay, to pick up in price and momentum to go up. If at all it goes under 50 by 10 pips, let's say 40, that means the price has gone down, broken out, and gone under 50, like 1.2540, then you have got more room to the downside. At this stage, it is confusing. It is in confusion mode, the market, for the GBP USD. So yes, you would be annoyed and frustrated if you are in the trade, still floating, and looking at or wondering when would you be hitting your take profit, for example, and why is it not moving so much? Why is it actually going to negative, positive for a while, positive, and then negative, and so on and so forth? So that's the reason why you are trading in a range market at this moment of time for GBP USD on a 1 hour chart especially. So let's look at what's going on next. Okay, now this is what we're waiting for. GBP USD is to the upside or downside, but under or above this range that I've just drawn for you. So you could see that how even the behavior of candle as well is just doing that, up and down, up and down, up and down. Okay, and it's playing in within that price of 25.50, within the range of that as well, within 10 pips or so of that. So it's not decided. Investors are not decided as yet. So let's look at whether or not we have got an idea of what pattern might be dominating at this moment of time. Okay, so what I see at the at first glance is a potential Z-like pattern. Okay, so what I would then see here, let me just give you an idea before I do that, is we may have a bit of a Z-like pattern, but I like zooming out first and see whether or not that might stay. It's not a very clear Z-like pattern here at this moment of time, but let us just look into whether we've got a bit of clarity with the trend in comparison to the 3 moving averages. Now here, with the 3 moving averages, is giving you an indication of an upside bias at this moment of time. When you zoom out, look at all these candles. They are above all 3 lines. Okay, it's giving you a sign that these 3 lines here are splitting open, pointing upwards, and then you've got all these candles above all 3 lines. So this is giving you a hint that if at all it were to break out, it's got more possibility to break out upwards, but again, you need price action to guide you. It's probably best and safer or lower in risk if you wait till price breaks out, but breaks out above 25.50 at least by 10 pips, like I've mentioned earlier on, at 25.60, 70 and above. Okay, and once that is done, only then it would give us a little bit of a better indicator that price have picked up to the upside. Okay, let's compare that to the medium-term 4-hour time frame. Now, on the medium-term 4-hour trend, it's still giving you that hint that prices are above all the three lines, okay, and it is still trapped in that range as well. So when you look at that range, you could see that you've got various ample of resistance and support in all the relevant areas here. So that is definitely a very, very important area or range, okay, between 1.2568 or so, right down to this area here at 1.2522 or so. Okay, so here again, uptrend on the medium term. Daily chart is where we will get a little bit more uncertainty. So if you are trading with your daily chart, then you want to be really careful, because on the longer term, it is still not certain whether or not prices can actually go up much more. Now, when we go to the 1 hour and the 4 hour, this is where we could see you've got that momentum to the upside for now, okay, or biasness to the upside. If we go into a very, very short time frame, you can see that 5 minutes, again, a bit uncertain, but it found support, so you've got upward momentum on the 5-minute chart. When we go on to the 15 minutes chart, you could see that prices again found support, and they are trying to go above all three lines. So again, GBP USD on the lower time frames, from short right up to medium, I would say short right up to about 1 hour chart or so, is giving you some bullish momentum for now for GBP USD. Okay, so that does marry a little bit with what we have seen on the reports by the banks. Okay, so this is giving you upside momentum for GBP USD. Okay, that is what is going on at this moment of time. Now here, in terms of pattern, we'll forget about the Z-like pattern, because I've just looked it through again. It's just not giving me that strong conviction that it is a high probability Z-like pattern. Okay, so we don't want to look into that area. But let's say if we go on to the 1 hour chart, I like looking at whether or not I can see support or resistance on the lines like this, on either one of the three lines. So here, for example, you've got prices going upwards, correct? And then it found the bounce, it found the support on one of the three EMAs, and that's a good chance to see whether or not that EMA line can push prices upwards. So here you could find a potential pattern, an ABCD. You just pull up from the low to the high, and then now from the high there to the low here. So you've got A, B, C, and a potential D upwards. So how far can D go? Now D can actually go as far as that AB's length, okay, to the upside. Now here it's just found a what do you call that, rejection candle there. Okay, this rejection candle on the 30 minutes is giving you an idea that for now it may need to go down a little bit more, because it rejected the upside. Okay, but if at all prices starts to go upwards and break out of this one here, this is how far prices may reach there at 1.2642 area. Okay, but if you cross out there, okay, when you convert that ABCD into a geometric pattern like this, you will find the center point. That center point is really important here. This gives you a possible entry area. So entry area here, meaning that you need candles to go above that middle area. Okay, needs to go above that middle area in order for us to, needs to go above that middle area here at 25.45. So above 25.45, but to use the principles of psychological numbers, 25.50 and above. So 25.60 would be ideal, so it needs to go above that zone. It's even better if you consider going above that zone in order for you to look at more bullish momentum. But it has found a bit of a rejection candle there, so I want to be very, very careful in not placing any trade at this moment of time until prices have actually gone above. If it does go above, it might come back down to the same area here, and once it does pick up, find support, you can then aim that take profit of yours at 26.40 area, not 26.42 but 26.40, which is about 10 pips under the 26.50 area. So there you go, you've got some support here, found support again, so we have got some room to consider GBP's move to the upside, okay, on the 30 minutes chart. So the same goes for the 1 hour chart, on the 4 hour chart as well. it's confirming some area until the D point. So yes, the answer is you've got some room to consider the upside, but you want to trade safely, meaning once prices have actually reached a safer zone for you to trade, which is above that, these areas here, above this line here, going upwards, then you can take that trade to the upside, looking at bullishness for the GBP USD, but aiming at the 2640 area. Okay, so that one there, from this point of the center point itself, let's say here, all the way up there, you're talking about 90 plus over pips. So if you give and take minus and enter correctly at 1.25, let's say 1.2560 and above, then you're looking at about 80 over pips or so, okay, to reach that area of 2640. Okay, so this is for the GBP USD 30 minutes or 1 hour chart that we are talking about. So we want to talk about lower time frame. We don't want to reach the daily, because the daily is given us some hints that it's a bit uncertain. So that, there you go guys, for the GBP USD. Now we'll move on to the USD JPY, but before we move on there, perhaps you guys have got any question on your current trade for GBP USD. Anybody's got any questions, or you can always reserve the questions for later at the end. But if you've got questions now relating to GBP USD, feel free to ask. You can always go back to that and answer your questions. Here we have got USD JPY. Now USD JPY is giving us lots of hints to the downside. Now this is clearly seen, let's say on the 1 hour chart. You have got a very nice move to the downside. Very strong candle play, very strong bearish candles in momentum at this moment of time. I think I've got some question. Yeah, sure. The three lines are the three exponential moving averages, Sashi. It's the moving average. When you go onto the insert, you go onto indicators, you click on moving average, but make sure the MA method, you want to change that from simple, you want to change that and make it exponential. Apply to always on the close, but you apply 3 times basically. The first time, the period part, you type in 50 and then you click on OK, and then you come back again, you type in 100 and then you click OK, and then you come back again, you type in 200. So there are 3 exponential moving averages: the 50, the 100 and the 200 are exponential moving averages. Okay, but it comes under moving average. You just need to change the parameters and things like that. Okay, all right, so that's for that, Sashi. Hope that's clear. And then we are now still on USD JPY. As you can see, you got loads of dominance of the bears. Okay, the bearish candles are just coming downwards, okay, at this moment of time. Now here we have got quite a number of good trades relating to the USD JPY. As you can see, you've got gold picking up very nicely, but I want to just give you an idea of what is going on. Now, for the USD JPY here, we find that there is a potential M-like pattern. But let me just clear off everything here so you know where you stand for the USD JPY trade. Okay, now here, this is the M-like pattern that we have spotted here. Okay, now the M-like pattern is a bullish pattern, meaning that once it reaches the end here, it's got a potential to go up. But we stand at X, A, okay, B, C, and D is down here. So we are traveling downwards at this moment of time to meet the D level before we bounce upwards. So you've got a downward momentum, downward or bearish opportunity to trade from C to D to the downside for USD JPY. So in order for us to trade that downside move, we use the help of geometric patterns of what we can actually spot. So at this moment of time, we have got that A, B, C, D potential. So how do we do that? Now, when you are in a bearish market, you want to look for bearish ABCDs only. When you are in a bullish market, you want to look at only bullish ABCDs. So the bearish ABCDs looks like this. Okay, so you've got A, B, C, and D. You are only trading the C to D move. Okay, now if it is bullish, then you want an A, B, C to D like this. So that's your A, B, C, D, and you are only trading upwards here from C to D. Okay, so that is basically what the ABCDs are. Now, this just stands at the ABCD. So we have got a potential A, B, C, and we are now forecasting where D could potentially go. Okay, so this is what we want. We want to sell from now and then take profit at a level that is closest to the reversal zone, or where prices could reverse. So let's do that very quickly now. We'll draw the USD JPY ABCD pattern, and we'll do A to B like that. Okay, and then you've got your B to C. Okay, the reason why we're drawing the bearish type ABCD is because we are expecting the market to be bearish for the USD JPY. So when you are bearish the market, you want to spot only bearish ABCDs. Okay, so how do we predict that, or predict or forecast the D, where D could go? One very simple rule is you draw the A to B, double click that, bring that across to the very top. That means the AB's length is equal to CD, like that. Very simple. Okay, so you've got A to B now, and you've also got your C to D leg. Okay, so once you've got that projection, you can see that very end, draw a horizontal line just at the very end. So this is telling you that if at all on the 1 hour chart USD JPY's price is expected to fall, it might fall to this level here. Whether it goes on and on and on or not, it's not really our concern. Whether it goes beyond 11138 and below, what we want is we want to trade this ABCD pattern. Okay, so how do we know where should we actually enter then? Now, the entry price usually comes after you have converted this ABCD into a geometric pattern. Very easy. You grab the A point, you attach that to the D point. You get the center point, you mark that center point in the middle, and you see that because it is a downward momentum, you want to only trade under the centroid or the center point area. Okay, so it is a 113.17 and below. As you can see, prices have already gone way beyond that area here. But let's say you want to still trade, okay, and you want to catch that last bits now. Should you actually enter or not? The answer to that question should actually be based on price action and whether or not you would be selling at the right price. Now you need to use the principles of psychological numbers for that. So you've got 112.13, let's say. Okay, now you want to trade to the downside, correct? Now downwards, the last two digits of the price based on USD JPY will be after the decimal point. So 13 to the downside is closest to which psychological number? It's closest to 00. So if you are trading, and now your focus should be 112.00, not 112.13 anymore, because the risk is at the psychological level. Okay, so what that means is even price are really showing you the downward momentum, it might just reverse very close to the 00 area. Okay, so you want to sell. If you are wanting to sell, you need to always sell only under the psychological number. Okay, so here under the psychological number, you need to trade or enter the price only when prices go towards 112.00 and go under, and only then should you be interested in selling. If not, it wouldn't be worth your while, because it might actually reverse very closely to the psychological number. This is how traders are caught up or being trapped in trading, or being stopped out as well, because they are trading too close to the psychological numbers. Okay, it should be 10 pips at least to the psychological numbers, like 111.111, okay, 0.90 would be a better price to sell, not 112.00, not 112.13. We're talking about the ideal or best price to trade. When you want to buy something or sell something, you're always talking about the price, correct? Of anything, a house, a car, whatever that is, you want to always buy or sell at the right price. It is the same principles that you would need to apply in trading forex or currencies. Is trade by the price and trade at the right price. So here you want to be selling only once prices goes at 11190 and below. Then you've got an idea that the bearishness or the bears or the sellers have dominated the market. Then you can aim here at 11338 or 11160 would be better. The reason for that is because the 38, when prices are coming downwards, it is too close to the one. When it is traveling downwards, it would be closest to the 1150 area. Okay, so that 11150, before market touches 11150, you should be exiting. So you should be exiting at least 10 pips above the 50 psychological number. So your exit price would be better at 11160. Okay, your entry price better at 11190. So as you tweak the price and you understand the trend and you wait for prices to go at the right price at the right time for you to enter the market, you will then get a better entry and better TP area. Okay, of course it makes it less for you in terms of the pips, but it heightens your probability and it lowers your risk. This would give you at least about 30 pips or so. Okay, but 30 pips there, where do you stop loss? You've got two choices in your stop loss. You can actually use the 67% Fibonacci ratio, which is 67% of A to B. This is your A, this is your B, right? You pull your A to B Fibonacci ratio using your Fibonacci tool, and you look for 67%, and you follow that line and you make your take profit, your stop loss level. Another way is to use the 1-to-1 ratio, meaning your potential number of pips for profit will equal to the potential number of pips in stop loss. So your stop loss will be about 30 pips away, as well, because your take profit, potential profit to make is 30 pips. So your potential loss as well, you can equal that to 30 pips. So your stop loss will be 30 pips from your entry point. Okay, so hope that is clear. That's your USD JPY. This is how we measure to tweak the numbers more into risk and money management side of it. So you would also need to understand that you pick the time frame to trade based on your equity. You don't pick your time frame just like that. Lower time frame, smaller equity. If you've got 1,000 and less and all that, try not looking at trades based on 1 hour chart and above. Best is to look at 1 hour and below. If you've got 10K and above and all that, only then you should be able to afford looking at bigger time frames like daily onwards and all that. You can still look at these time frames to determine the trend, but do not rely, your take profit to reach or so based on that, or because you would be able to aim at bigger number of pips as your take profit potential when you are looking at bigger time frame. But bigger time frames will actually will be more suitable for bigger equity or bigger capital to start off with. Okay, your equity level especially. So if I have got like $500 and all that, I want to start with the Forex and I want to look into building up my account, it's probably best for me to look at grouping 3 time frames. Let's say like the 5 minutes, 15 minutes, and the 30 minutes. I can still look at 1 hour, 4 hour daily to look at whether or not I've got loads and loads of shapes, loads and loads of good patterns there with a trend really strong, and I match them all up is fine. But I want to also look at the lower time frame to mirror the trend in the higher time frame. Okay, so if all time frames, like the higher ones is showing an uptrend and then my lower ones also showing me the uptrend, then I can trade using smaller patterns. You may have a very big pattern in the daily chart, but when you go on to the 30 minutes or the 5 minutes, you can see that pattern becomes smaller, but it's within the big pattern. Okay, so that's what I meant by trading in stages. You want to trade in smaller patterns within a big pattern, but you can always use the bigger time frame to determine or help you understand the trend as a whole first. Okay, and then you decide which set of 3 time frames you need to focus on based on your equity. That's probably the best way to do it. Okay, all right. There you go. We've got it covered on the USD/JPY. Since we've covered the USD/JPY, if you guys have got no question on the USD/JPY, then we shall then go on to gold. Okay. Now, gold has been a very beautiful, nice trade based on the W-like pattern, based on the daily chart. The daily chart has been going on since last week and a half or so. Okay, and it's progressing from C to D very, very nicely. Okay, so you've got the C right there. I'll just label, and you've got the D. The D is supposed to be within the zone, so we are trading to the upside at the moment on the W pattern. The W pattern shapes like this. Okay, exactly like what you see here in purple. When it reaches this zone area here, this is your D point. Okay, this is your C, this is your A. Okay, this is your B, and this is your X. So X, A, B, C, and then D. Now when it's up to the D area, it is expected to fall downwards. So that is the area that is expected, that little red arrow down. So this is where it is expected. So it's expected for prices to first go up and flirt around that area, okay, and then find its way downwards. Okay, so this is a downwards, meaning it may actually still be a correction downwards, not so much, and then bounce up again. We don't know that yet. We need to look at pattern by pattern, stage by stage. Okay, at this stage, we're looking at the C to D leg of the W-like pattern. Okay, so you've got your X here. Okay, you've got your A right there. That's your B. This your C. So C to D is progressing, but the price, as you can see on live markets now, you're looking at prices entering the zone. This zone here, I call it the PRZ, or the potential reversal zone, which means that if prices goes in within that range of these lines, it may then find its way to come back down, okay, sorry, to reverse, because this is your PRZ, this is your potential reversal zone. Any one of these yellow lines may actually act as a deterrent to prices moving upwards, may act as an obstacle as well. So that's why I've lined all this up and named that the PRZ zone in blue color. Okay, so it is still, yes, going upwards very nicely, but again, it is going into the zone very slowly but surely, and once it does that, it could reverse anytime and anywhere it wants within this zone. So from 1258 to 1280. Now 1280 is your next psychological level, 1250 is your next one, is your lower one, okay? Lower one, 1250, which is 1250, okay, per ounce, and then the one very top is 1280, okay, dollars. So that's the price of the gold versus the dollar, and if at all it goes under 1250 and below, then you know it's started to go into the bearish momentum. But if it does go above now 1260 and above, let's say, then you're looking at more momentum to the upside, and it's got chances to reach the 1270 area, very close to the 1280 area. But do watch out, if at all prices go above and goes into the zone and going up and up and up, you need to be very careful, as this is a W-like pattern, so you need to look out or watch out for the 1280 price. So it's probably best, if you've got that momentum up, to exit before prices reaches 1280. You can re-enter the trade again once it reaches 1285 and above and above. But in my opinion, it's probably best for us to trade the upside now, but you know, it depends on the strength of the dollar as well. As the strength of the dollar weakens, then you can see more chances and more uncertainty, and more geopolitical uncertainty as well will give more rise to the safe haven of both yen as a currency and the gold as well as silver, but gold especially. Okay, so if it does go up and up, then look out for the 1280 area. Best to exit close to the 1270 area and just wait for prices to fall under this zone to take that downside movement as well. So that is for your gold trade. So this pattern has been going on very nicely for gold, the W bearish pattern. Okay, All right. For those who are wondering where have I gone into trading gold, was above this center point area here. So it was well above, I think for myself personally, 1202. I took it at 1210 or so and above, because it's 1200. I take that as 1200. 00 is your site number, so above 10, above 00 is 10. So 1210 and above is the up price, and I think I am very close to exiting at 1260. That's just for me personally, but then if at all I see more momentum to the upside, then I would be exiting at the 1270 area before it reaches the 1280. Okay, so that's your gold forecast, a little bit based on geometric patterns. Any questions at all, guys, for gold? Any of you guys who are trading gold at the moment, if you guys have got any questions, feel free. We can talk about gold. It is definitely quite unpredictable in the market at the moment. We've got lots of geopolitics, especially politics with regards to elections in the Eurozone. So the Eurozone, we've got elections coming up. We've got things regarding Greece, and all that has already gone past a bit, but it's not ending. The crisis in Greece is not ending at all, but we've got upcoming elections in France and Netherlands that are going to really shake the market a lot more, because we're talking about populism. We're talking about the populist movement, meaning anti-government. We're talking about people who are popular in that area of line where they go against the government. They're thinking of the people and all these kind of things, like how Brexit won because of populism, how Trump won because of populism. So now that rise of populism is coming into the Eurozone as well. The one who are least expected to win may end up winning, and may end up, coming up with things that would impress and convince the public to vote for them and things like that. So this is what's going on in the Eurozone at this moment of time. Okay, so we've still got the Brexit thing, we've still got Trump in the within the 100-day presidential period, and we have this upcoming movement from the politics side in France and Netherlands as well as Italy. Okay, all right, that's your gold, and then we have got that's basically how I've drawn the ABCD for gold right there. We just started with A, B, B to C, and then C to D. You project that by drawing the AB equals CD like that. And when you attach the bigger movement from here to there, that's how you make that to be a W-like pattern. That's for gold. Okay. Now, as we go on to the to silver. Now with silver, it's really interesting. I have sort of spotted a Z-like pattern like here. Okay, this is a Z-like pattern. That tail area is quite close to the head area right there. Okay, so we've got A to B, and then A to B equals C to D in length, but this long body of this Z-like pattern for silver on the daily chart is giving me some room to understand that it's picking up, and it's got more room to reach that area there, okay, at the 18.73 area. Now if you look left, you can see that that's also a significant resistance area where price has fallen from as well, roughly that area there. So this gives me a possibility that prices might go upwards to that area and try to fall. Now if it does actually fall and reverse and come downwards towards D and finally reaches D, then you are looking at the completion of a Z-like pattern that starts off with A here, B here, C to the D, and we always trade the C to D move. And once it does reach that D zone area, it's expected to go upwards as well. So the Z-like pattern is like that. That's your A, B, C, D. But this is a bullish type Z pattern, and once it reaches the D, it's expected to move upwards. So we usually trade the C to D, and some could also trade the D to E as well. Okay, so that's your Z-like pattern for the silver, just to give you an idea for those who are trading the silver. And this is the daily chart that we are looking at this moment of time. So it's got some resemblance to the gold that we have just seen. Pattern-wise, we see a nice Z-like pattern for the silver, but an even nicer W-like pattern for the gold, with prices trading the C to D leg to the upside at this moment of time. Okay, so that's your silver, guys. Now let's just clear off all these drawings right here, and let's go on to, let's look at what's going on the rest of the what do you call that, currencies at this moment. Now here on the Euro USD 1 hour chart, just give me a second. On the 1 hour chart, we're looking at some movement to the upside. Is it a correction or not? We're not sure. Is it a change of total trend for the Euro USD? We need to trade that in stages and look at it as a cluster of time frames. Now, at this moment of time, we look at the cluster of time frame from 1 hour right to the daily chart, let's say. Okay, so 1 hour chart here, we can see that prices above the three lines there, and as we zoom in, we can see that we've got more movement to the upside. Candles are also showing you the domination by bullish by the bulls or by the buyers. Okay, it found support here at one of the moving averages, which is a good sign. When you see prices or candlesticks finding support or resistance at either one of the three lines, is a very good sign. So here prices went up there, found resistance, but then come back up, but it managed to gone over these resistance, so got more buying power. And then what fallen down actually got less and less, and this is one thing that you need to look at as well. When you look at prices going up, you need to look at what goes on between the swings. That is the high and then the low, correct? The high and then the low. What went on to the low area in between the high and the low? Did the movement get less and less or not? Okay, here we could see that the bulls are dominating more. Now let's look at the price, 1.0610. Now this is the price, we're talking about the Euro USD on a 1 hour chart at the moment, 1.0612, right? On the downside, we have got the 00 psychological number. That means 1.06, okay, 00. On the upside, we've got the challenge of 1.0620. So price seem to be trapped in between the 1.0620 and 1.0600 side number. Okay, so if at all you want this movement here to go more to the upside, you would need prices to go upwards, reaching 0.620 and above. And once it does go above 20, let's say 1.06 and 30 onwards, then you've got a clearer move to the upside for the Euro USD 1 hour chart. Okay, so I'll clear that off first, and you could see now what's going on. Okay, 1.0610 now, but then look at where the price have actually stopped going up at here, 1.0616. so 16 is 16, or 17, let's say 17, yeah, 1.0717. 1.0617 is only 3 pips away from the 20 side number. Okay, so it didn't go above 20, you see. So now it's giving you a hint that there may be a correction because prices didn't go above the 20 side number, and it's heading downwards at this moment of time. Okay, so here, as you can see, on a live market, it's heading downwards and downwards and downwards, but it might again find support. Where would it find support? It would find support at the 0600 area, or very close to this blue line, the dark blue line of 200 moving average right here. The exponential moving average of 200 is right there. So there would be very close to this area here. That's 0592 area. Okay, so 92 and the 00, the 0600 area is really close as well. So let's look at what's going on here at this area here. Do we have any support? You need to always look to the left as well, okay, to look at whether you could find any hints. Now let's just go to the 4 hour chart. Now on the 4 hour chart, you could see that prices going towards the upside. Now the reason for that is, the reason for uncertainty in the Euro USD 4 hour charts because of the candles moving in between the lines. But price action itself is telling you that is just too close to the side numbers, and there are two side numbers. One is a 0620. Let me mark that. Okay, 0620. Okay, there you go. And the other is 0600. Okay, there you go. Now, so you've got that zone right there, 0, 6. Okay. Oh. Okay. You've got that zone, just an idea. Okay. You need to pierce, the prices need to pierce through that zone. But once it goes above the zone and above all three lines, it's a better idea to understand that the momentum is to the upside, okay, of the market for the Euro USD. But at this moment of time, it's quite unpredictable, even for the 4-hour chart. On the 1-hour chart, it's a little clearer to the upside, but on the 4-hour chart, it's picking up but hasn't reached there yet. It needs to go above all three lines. Now, the daily chart, it's still to the downside, moving up as well. So there may be room to the upside for the euro, but that is not sure. The long term, on the weekly chart, on the monthly chart, we just got lots of room to the downside. So for the long term, we're looking at downward momentum, bearishness for the Euro USD. But we need to pick the time frame as though they are bricks to build a house. You need to go brick by brick from a small time frame to look at whether or not you can see the big picture. So what do you see as a big picture? On the 5-minute chart first, you see that there's a pickup of momentum to the upside, okay, bullishness, because you've got all three lines pointing up, you've got candles to the upside or above all three lines. Then you go on to the 15-minute chart, you see the same picture. You see movement to the upside. On the 30 minutes, it's again giving you nice support there, pushing prices upwards, but still in within this range here. But then go on to the 1-hour chart, there it just seemed to be some bullishness expected from short term, maybe to medium term, but from shortest term, from now until a couple of days maybe, from now until 1 or 2 days maybe, or maybe for the next 24 hours or so. Okay, we still expect some bullishness. To what extent? It does depend on the site number, it does depend on whether it breaks away out of this area and reaching which potential resistance. You've got resistance right there, you've got resistance here, but as soon as it goes past through, you've got that resistance that is right there too, okay, here. This is one resistance zone. Later on, once it does go above this zone, it's got that resistance zone to actually face, and that is very close to the 0650 area as well. Once it does go above and go above that peak there, then you've got next resistance perhaps around that area here. Okay, so let's just do it. So you've got resistance area here, very powerful resistance area here. So even if it does go above, you need to still look out for this one. So because they are resistant, we cannot then look into too long a term to trade the Euro USD to the upside, because you just have got risk involved. So perhaps to the short term to the upside, but on the longer term it's to the downside. And then we go into the 4-hour chart. You can see that it's building uncertainty from 4-hour chart onwards. So let's forget 4-hour, daily, weekly, monthly for now. Let's look into the 5-minute chart, 30 minutes, 1 hour to trade to the upside, but you would need to look into price action and use the psychological numbers to do that. As you can see, prices very easily, Euro USD, finding that resistance right there, okay, before 0620 second number, and now it's heading to the downside. Would it go pierce through that 0600 and under or not? We would need to wait and see, and only after it goes under, let's say 0590 and below, or 0580 and below, it will give you more momentum to the downside. And only after all these three lines it goes under, then it gives you a clearer breakthrough to the downside. So this is the situation for the Euro USD this moment of time. So there's a lot of waiting needed for the Euro USD compared to the other pairs. Okay, so we'll move next. If you guys have got no question on the Euro USD, probably look into what's going on with the GBP. Perhaps the GBP AUD may be a pattern that have actually failed most probably, but you would have taken your, you would have your stop loss triggered, and that stop loss would actually be at 67% of the A to B move, not A to D, but A to B. Okay, you pull your Fibonacci, for example, okay, and this is how you govern your, not govern your losses, but you have that level of control to your losses, or your stop loss be at 67%. You pull that A to B, you look at 67%, so there you go. That's your level roughly of your stop loss at 0.6. 1.6282, but I will take it before reaching 6282 at 6270. I adjusted to psychological numbers as well, so I adjusted at 6270, let's say. Okay, so we've got 6270. Okay, so this is your area that you would be having your stop loss at the 1.6270 price. Okay, your entry at 6190, and your presumably take profit at 6060. So initially the potential was to have a potential profit of 130 pips, let's say 129 pips roughly, yeah, but then your stop loss would be only at about 80, about 79 or 77, 78, 79 pips or so. So that is that ratio there. You have got 2 to 1 type ratio, 1 to 2 type ratio. So you would have been taken out of the market at 70 over pips, but your potential profit would be about 120 over pips. But for now, perhaps it still hasn't actually, or maybe have or not, I don't think so. Or let me see, oh yes, it has triggered that stop loss, so it's giving you that alert that that pattern has actually failed. But the stop loss needs to be there. Out of how many trades, let's say, you would need to look into at least more wins than losses. So you would need to still govern or control your losses based on your stop losses. And your stop losses, you can use the Fibonacci ratio or a 1-to-1 ratio, risk to reward. Okay, let's just look at that. Now, GBP AUD, you need to then look into why it has maybe failed. Has it actually gone into more bullish momentum? And from the look of it at the GBP AUD 1-hour chart, yes, you've got loads of movement to the upside. You do have the hints of prices just finding support with the 3 moving average and moving upwards. Okay, so you've got pickup of momentum of prices there. Maybe it's looking for more resistance, maybe close to the 200 moving average there, and then down it goes again. Okay, so that is basically it. It's better to cut your losses early as well, or if not, it might just multiply if you don't actually have your stop loss. And it's better to re-enter your trade with a better probability, with a better pattern that offers you a better probability the second time onwards, and you should look into multiplying your portfolios by looking at correlated pairs as well. Okay, all right, there you go. You've got your GBP AUD right there. You've got your GBP. Now with GBP JPY, because of all the things that's been going on, we were looking at this trade there that has triggered the stop loss for that trade right there. Okay, so that would be your second loss out of 10. So you've got 7 to 8 that are winning trades, winning patterns. That's very good enough, and then that means it's a 70 to 80% type probability, and you've got your 2 that didn't actually work out, so it triggered your stop loss. So that is still fine. You need to accept that as part of trading, where you have got losses incurred, definitely. But out of 10 trades, you want 6-7 wins, up to 8 if possible. That is a good winning ratio already. as opposed to the other way around, which you will not be happy about, having more losses than winnings. Okay, so here, for example, we have got a bit of an A, B, C, D to the downside this moment of time, but if I look at the C point, it's not finding any resistance at any one of the three lines. Usually if it does find resistance at the lines, it's a better one to trade. Okay, so I'll give you a sample here. Let's say, like for this one here, it went up all the way, it found the support, you see, very close to the three lines, or bounce off from the three lines exactly. So many support on the three lines, either one of the three lines, and then it found that support and pushed price upwards. So you want the C point to usually have to bounce off from either one of the three lines. Like here, for example, all the way down, there could be your A, your B, but then it found the C. C found itself bouncing off from the three lines, and then it went down, and the same goes here as well. Okay, so you want that kind of movement where you've got an A, a B, and then the C hits either one of the three lines and then bouncing off from there. Okay, whether to the upside or to the downside, that's a good thing once it bounces off from either one of the lines. Okay, it gives you a better probability. All right, so there you go. That's your GBP USD at this moment of time. You have got against the yen. For the pound against the yen is a different story. Now, do not actually think that the pound versus one currency like the GBP USD, if it is strong there, then it's strong all across the board. It doesn't work like that. Different pairs got its own personality type. So with the yen, yen has its own personality, GBP has its own personality, so each one driven by different things in its respective country, and different ways of how it's treated as an investment instrument. So we need to then look into what's going on with the yen as well. Now here, as we know, geopolitical reasons and all that, we've got loads of safe haven participation following the yen. So that is giving rise to the yen and giving strength to the yen. So the GBP yen scenario may not be like GBP USD. Okay, so GBP yen, we were looking at the weakening of the or weak sentiments of the pound versus the yen, and the yen has got more strength at this moment of time. Okay, so this is where we look into how it has dominated the scene. Now here, for example, if I were to look into 1 hour, 4 hour, and daily, I may not be able to see it as a nice group of three currencies, because D just cuts out that excitement to understand the trend, because in the daily chart the prices are still within that price range, and that's not really good. They're giving us uncertainty, we're just unsure of what's going on in terms of the trend direction. So I would then need to go into lower time frame to pick a set of three that would give me a better sort of idea or direction in terms of trend. Here, for example, it's really clear, nice to see three lines not touching each other, the three moving averages, and they are pointing downwards, and then you have got a bounce off from there, coming down with long, strong candles to the downside. So here itself, you've got a better idea in terms of trend direction for the GBP JPY on a 5 minutes chart to the downside, or biasness to the bearish territory. Okay, so if we go into the 15 minutes chart, we could see that that whole idea is still the same. We've got loads and loads of power to the downside. Okay, now here, for example, we have got prices at 140.45. 140.45, 0.45 is too close to the 50. It needs to go under 50 by 10 pips to reach the 140.40 area and below. Then we've got an idea of how much prices can go down even more. Okay, so if we go onto the 1 hour chart, you can see that the bearishness just dominates all the way through from 5 minutes, okay, right up to 4 hour, but then daily it got stuck there at a sort of triangle type range like this. So that is the triangle of confusion right there. You've got triangle of confusion. It needs to play around in within. It is playing around in within that area here. It will break that way or this way, we don't actually know just yet. So we are looking into the lower time frames to trade in stages with patterns that show us more clarity, so we can take that. that direction of the trend. Here on the higher time frames, we're looking at more bearishness, of course, but then prices sort of got very unclear once it reached that daily chart. So you have got a choice or a chance to trade the Euro US, the GBP JPY on the downside, but perhaps on lower time frames, not on higher time frames. Okay, so here if we've got an A all the way to B, if you want to take your C as that one there, then what you can do is bring that one all the way down here, and you can see that prices may actually be able to give you an opportunity for a sell to take profit at that level there at 140.04. So 04 above 00 will be 140.10. That will be a better place to look into it. So 140.10 and now it's at 45, so it's got about 30 over pips or so, or close to 30 pips. So that's basically it. Now you can see that prices here is just giving a bit of a rise there, okay, on the GBP JPY on the 5-minute chart. So here itself, you can see and understand why that bearish candle has actually gone down, progressed further until this end here at the wick of this candle. But where did it actually stop? It went downward, stopped there, and that is at 140.30 at least. So it didn't actually go under 20, because the closest one there, 140.30 towards the downside is a 140.20 side number. So you see it's just bounced off. So it's not giving you that strength to the downside as yet, this moment of time, based on the 5-minute chart for GBP USD. So we need to be sure. Overall, it's giving you more strength to the downside, but perhaps on the lower time frame, it's giving you some corrective move before it goes down even more. Okay, so that's GBP JPY. We've covered a few already. I think I've got some question coming up. Very good. So Mr. Kunan's question here. The Euro USD moving below 0610, now strong downtrend. That's a very good reminder, Mr. Kunan. Thank you very much. Let's just go on to now on the live market in the Euro USD. There you go. That's what we want to look at. So here we have got that confirmation that it has gone under. Let's forget about all these lines above there, and let's now trade with this one here. What is it going on? What is going on with this one here is giving you very strong bearish candle. Didn't go above that zone that we have just what do you call that, indicated there, correct? So it's gone under 0600 down, and now it's going into the uncertain territory first. Don't get overly excited and just go into the sell at this moment of time. If you want to appear more conservative or more sure, it's better. Perhaps it's driven by some news at this moment of time. So if you want that news to drive your price lower so that you go into a safety or a safe mode to trade and sell the euro, it should go under all the three lines. Okay, now it's at 0583. So what's the next level? 0580. Yeah, let's just do that. 0580 is your next psychological level. So you see it's coming downwards and it's touching or going to be touching the 0580 psychological level. So if you want to know whether or not the sellers are dominating and will actually have got more chance to sell and sell and sell, you need price to go under the 80 side number. So under the 80, at least 1.0570. Okay, 10 pips under 80. Okay, because anything can happen at this moment of time. Anything can happen, meaning it can actually bounce upwards within 10 pips of the 80 side number. Maybe 84, 85, 88, whatever, because it's above a few pips above the 80. It might just take it and run away and go above. Okay, so here itself, let's say I want to measure whether or not this area here gives me a nice Fibonacci level. It gives me the 200 Fibonacci level. So if it does give me the 200 Fibonacci level, I might see this as a potential ABCD pattern, potential Z pattern, sorry. So I will move that AB equals CD right there and predict that, or forecast that that fall might actually be able to fall at 0555 area. Okay, the reason for that is because we can look at that stretch right there forming an ABCD of a Z pattern right there. Okay, so here it looks like a good Z-like pattern here. Let me just measure the criteria based on Fibonacci. I can see that it's giving me some good potential, and if at all, because it went down like that and it's got all this shape that meets my criteria as a Z-like pattern, I see that this may be a potential. Now that potential downward move for the Euro USD may find a bounce at this area at the 1.0555 or 1.0550s area. Okay, so yes, there's some selling opportunity here, but to this level here. The reason for that is because this is a Z-like pattern that is shaped like this. Yeah, so you got A, B, C, C, D. So now prices is coming to the downside like this. Yeah. Now it may end up to be very close to the D area here, and once it does reach the D area, it's expected to bounce upwards. Okay, so let's look at what's going on. And for those scalpers, for those who are looking into trading in the very short term with very little pips at some, at time to time, then they are scalping. Then they might take this right on here. Okay, for pattern traders like us, we are careful in looking at the price action as well, because even though we trade with patterns are price patterns, so we take a lot of consideration with prices. So at this moment of time, as you can see, this very long candle, has encapsulated loads of other candles here as well. All this 1, 2, 3, 4. So it gives you that power of 4 candles there that it can go down to. So we need to wait for maybe the next candle might drive lower as well. So we need to wait. We need to look at when this candle is actually formed. That's 3 o'clock. Okay, it's my time. There you go. So yes, we're looking at that now. It has actually gone under 0.580, so that is giving us some hint. But watch out for that two little lines right there, the 50 and the 100 moving average might find support there as well. So nothing is for sure at this moment of time, but if it does go under, then it has possibility to reach a D point. If it does reach a D point, it's got more potential to actually reverse near the D point to go upwards as well. So it's a very nice one to take a look at and see what's going on with that Z pattern there. You know how successful that is. For me, I just like to look at how much candles are trading, whether under the 3 lines or above the 3 lines. If they are trading in within the 3 lines, it's just giving me that more reason to doubt it, because when they are in between the 3 lines, it may not actually be giving you that high of momentum. Okay, so but at this stage here on the Z-like pattern, it is definitely giving some more hints that this may actually just drive prices down to this area. But let's look at whether or not that would bounce up. If it does actually find weakness around this area, then you've got a sort of successful Z-like pattern that may see prices bounce off from this area here. Okay, at 105.55 area. All right. There you go. That's a nice one. Thank you, Mr. Kunan, for pointing that out. It's a good one to see it live in action. It's a good one. Okay, so what do we see in the lower time frame for the Euro USD at the moment? You can see that there's just loads and loads of power by the sellers, all dominated by longish bearish candles right there. As we go on to the 30 minutes, let's say we are still looking at that going on and on. Yes, touching that line there, and it's got more potential definitely. This is probably driven by news, but then this pattern itself may still stay intact while the news is going on to confirm that it's a Z, unless you've got loads and loads of how do you call that, news that is driving price much lower for the longer term. Then it may fail this pattern and go lower, but it does not mean that you cannot take that trade from C to D. It's just that you can take that trade and finish at D and let price go on and look for other patterns that may then confirm that lower move to the downside. Okay, there you go. look at how the prices now has respected that level of the 50 moving average right there. Okay, so here this is where the danger is, and that's the reason why I've mentioned about being aware and looking at the risk of prices in between the line or having the three lines very close. That three lines gives you that indication. When prices are under all three lines, a better idea for a bearish market. Above all three lines, better idea of a bullish market. Okay, so these three lines are similar lines used by Bloomberg, CNN, and all that when they are showing, I mean, in the news during you know, media presentations and all that. They usually use the same three lines too for most of the instruments, including stocks and equities. Okay. All right, GBP UAD, we're still finding it a bit of a struggle there, but it is heading downwards, and that is actually a good sign. You got prices under all three lines as well, so this is something we're still awaiting on. Euro JPY is now moving downwards too. Here we have got AUD USD. Again, it's got a bit of a Z-like pattern here, but it does depend on whether or not AUD will find more momentum to the upside. If it does, then it may have the potential to reach that area here to complete that Z-like pattern. At this moment of time, it's finding that bearishness here. It's got some how do you call that, resistance zone here, really strong resistance zone. As you can see, always look to your left and you can see how many points of resistance all at this zone here. Okay, and this zone here, you can mark that zone by having the highest body there and the highest tail right there, and that zone marked at 77.40 right up to the quadruple or 7777 area is giving you that resistance area right there. So it has marked that resistance area and found resistance at that area too. So hence the reason we've got more selling power at this moment of time, AUD versus the USD. This is the daily chart that we're looking at, and when we go on to the very short term on the 5-minute chart, we can see that we have got that bearishness as well there confirmed, but a bit of corrections that's going on at this moment of time for the AUD USD. But overall, it's looking like it's got more bearishness or bias to the downside as opposed to the upside. Okay, that's what we can see here as well on the 1-hour chart. Okay, guys, I think we've covered quite a number of patterns as well as instruments. If you guys have got no question, I'll wrap this one up here. But if you guys have got questions, feel free to ask on any pairs that you're looking at or trading at this moment of time, or the usage of indicators or the patterns itself. Feel free, guys. Any questions at all from anyone? No questions? Okay, I most probably will still be doing the Monday's webinar, because Monday is a public holiday here, religious holiday here in Cyprus, in Limassol. So it's a public holiday generally, but I'll come into the studio for about an hour or so to conduct the webinar. So it'll still be up and running on Monday, Monday at 3 p.m. Cyprus time, it's GMT +2. Okay, so just to let you guys know, feel free to still attend the Mondays and Thursdays webinars. Okay, so I think I've got some questions here. I don't see the questions here. Any questions at all, guys? If not, I'll have the sessions wrapped up here. No questions at all? Anybody trading the AUD USD at this moment of time, or the GBP USD? GBP USD, I know a couple of you guys are trading the GBP USD, Sasi especially, Mr. Kunin as well. I guess there's a couple of things, Euro USD, but gold and there's some interest in gold as well, to the upside, of course, following that W-like pattern. So we have seen this week has been quite a good week again, repetitively, very nice. Of course, we have got some losing trade, but if we're looking at 10 trades or 10 trade signals, we're looking at 2 to 3 wrong ones, say failed patterns, but of course with planned SL or stop losses, okay, following the 1-to-1 ratio or the 67% Fibonacci ratio of the A to B pattern, A to B leg, so of the ABCD pattern. So yes, we have a run of good profits targets being hit by various patterns. So it's been a very good week, another very good week indeed. So on average, we usually based on geometric patterns itself, it's out of 10 trades, we've got 7 to 8, right? So we've got 2 to 3 wrongs or failed patterns, and that is still, I would think, still good, and we have seen lots of happy traders with that, including myself. So we are still progressing with that and sharing with you as much as we can. So any questions at all, guys? No questions. I see that everything is quite quiet in the room, so no questions at all. All right. Yes. Yes, Mr. Kunan, no problems at all. So CHF JPY, the Swiss franc, okay, versus the JPY. Let's look at that very quickly. Just go on to the CHF JPY, guys. Okay. Let's see. It's an interesting one, CHF. It's quietly building up in momentum, meaning we have got quite a number of interest by banks trading that pair on the CHF JPY. So I've got CAD CHF right there. Oops, sorry for that. CHF JPY. There we go. So let's clear out all the drawings right there first. Okay, and let's look into this. Okay, we'll start off the 1 hour chart first, or shall we then build it up from a 5 minutes chart? Let's look at what's going on as a story. Okay, it's a story of trend. We can see that we've got all that build up sideways, and then it broke downwards. It broke downwards, it went under all 3 lines. I can see that we've got some momentum building up to the downside. We have got lots of resistance that found its place very close to the 3 moving averages. As we see the 15 minutes and the 30 minutes, not much of a difference in what we see in the 5 minutes. So that actually means more downward momentum. Longer candles giving you more signals to the downside for the CHF. So CHF to the sell of the CHF and buying of the yen. So this does actually confirm a lot about how the safe haven is building up for the yen. Okay, more geopolitical reasons, geopolitical risk factors, more uncertainty politics wise and all that. You've got loads and loads of selling of the CHF versus the yen, because there's more buying of the safe haven yen. Okay, so this is one, and then as we go on to the 1 hour chart, we see a very nice build up. The reason for me saying very nice is because we have got A here, B, and then got a C that points and resisted at the 3 moving averages, and then you've got all these lines pointing downwards as well. Look at the angle of the clock angle itself is the 5 o'clock angle, which does signal more momentum to the downside. So this is this means more momentum to the downside of the Swiss franc, but then more momentum to the upside for the yen. So CHF versus the yen, it's probably giving you more downward or bearish ABCD type pattern as well. Okay, so here as we move on, you can see that again it's building up. Candles are moving further and further away to the downside from the 3 moving averages. These 3 moving averages are splitting open, pointing downwards, giving you more rise. Now I want you guys to look at this part here. This is the down move, that's the down move, and this is some more downward move expected. But look at this correction, look at this correction. Okay, it's more or less steady or getting less. So it's not building up the momentum to the upside, but it's building up to the momentum of the downside. It's built up by very strong bearish candles, but here the momentum to the upside, the corrective move upwards, is built up by very small, less strong bullish candle. So this is definitely giving you more and more momentum to the downside, meaning bearishness, meaning opportunities to sell for the CHF JPY. Okay, so let's look at whether or not we can draw out a very simple pattern, give us a bit of an idea what can we trade. Here we should stay away or stay out of drawing patterns on the CHF JPY daily chart. Reason for that is because we've got most of the prices or candle sticks at the moment, trading in between the three lines. And I personally don't like to see this, or don't like to spend too much time on a chart that has got the candles in within the three lines. Okay, it's clearer perhaps in other time frames, but not really on the weekly as well as, let's say, monthly is there. So anything that is from daily, weekly, monthly, we'll forget about it for now. We should go on the 4-hour chart and below. So if we're looking at, let's say, the 30 minutes chart right there, okay, we could always pull your Fibonacci from the very top around here all the way down, and we can see that it has met 38.2 area here, and then found resistance here at the 50 area as well. So you can always, based on that A here, B, and then let's C around there if you want. Okay, and here we have got some clear sort of pattern as well. You've got your A to B right there. You can take that one there as your C, as it is the highest point right there. So A to B, you've got your legs drawn from A to B. Okay, just polish up this one here, and as you move downwards right there, that's how you forecast or predict the potential D area. Okay, so let's look at whether or not it's best to look at this point here as your X or this point here. So we can always pull your Fibonacci from the highest point all the way down and look at your C point, which one happens to hit on the dot of any one of the Fibonacci level. If I move that one lower down here, it hits exactly on the 50%. So then that gives me that answer of which level, that or that. The answer would be this one here, this level here, this lower peak, not the higher peak, because A, B, my C hits 50% once I pull it from this peak, not this peak. Okay, so then it gives me an idea that price may be falling through at this level here at 11130. So here itself, if I convert that pattern all the way down from A to D here into a geometric pattern, I could see that my selling area would be under this area, which has already happened. So we're looking at the potential of a downward move right down. Now, as prices come downwards, or we expect for it to come down, we need to look at previous support, previous area that would be challenging us. So here we've got prices now at 11163 or 64 area by this white line here, horizontal white line live prices. We go on to a bigger time frame like the 15 minutes or let's say the 30 minutes, and let's look at previously we have some support here. So you need to be watching this area as well, because prices had gone up at this level here. Okay, all this area, so I need to mark that one there, as well as this wick right here too. So I've got a zone right there. Okay, so here when I mark that zone, that's why you can see prices just bounce up a little bit right there, because it has bounced up from a level where it has previously been bought, and previously it's where the bulls have actually dominated in the past. So usually what happens is it's best for you as a trader to always look to the left, zoom out. Okay, look to the left, zoom out, and look at where has it actually bounced off. This is your thread here. You are going downwards, but where would the bulls take you out? It would take you out at where it has taken all other sellers out in the past. That's why it's building that up momentum, you see. So it might give you a bit of a correction to the upside and then come back down again. So that is their possibility. So for those who are wondering why is it doing that, that's why. You've got the evidence of why it's doing that from previous buy. This is where it shot up before. So when price is going down, you need to always ask, where could it go up again? Then you look left, the answer would be there, always. If you go to higher time frame, make that lower, okay, or even higher time frame, you could see that is why prices just coming downwards there, that zone, because that is the zone where prices have shot up a lot. Shot up there, come back down, up again, down again, but it reached way above. So these are very, very significant support area. You got a support area here, okay, support area here, support area here, support area here. Okay, that's quite a big move as well, all the way up. Okay, and this one too. So this is the reason why this level here is quite a significant support level. So it would need to go, let's say, under that zone, okay, to be safe, under this zone here. All right, under 114 150. Once it goes under 150, hence the reason we want to always pay a lot of attention to the price action based on psychological numbers. Okay, as it goes down, it goes under 150, under 150, which is a side number, it's got more room to the downside. Okay, hope that's clear, Mr. Kunan, for the CHF JPY. You guys can also go on to mataf.com and you can find correlation table. So let's say, for example, you look at CHF JPY and you can look at what correlated pair, which pair moves the same direction with CHF JPY, which pair move opposite direction. You can look at the ratio in percentage. So let's say CHF JPY, if I've got one pair that moves very closely to CHF JPY, very highly, maybe Euro JPY or something like that, then I can trade that too, and I can actually see the same pattern that I could see on CHF JPY on that pair that is highly correlated to as well. Okay, all right, that's basically it on pleasure, Mr. Kunan. Any other pairs at all, you guys? Perhaps if no more pair, then I shall close the session here, end the session here, and then see you again on Monday. Okay, same time, 3 p.m. I hope you guys pip up your pips, okay, and happy pipping to you guys, and hope it has been a very nice, good, happy pipping week, and enjoy your weekend with that. So this is basically the reason why we're here as well, is to give you more guidance, but also to enjoy bagging the pips together. Okay, so we've got lots of trade ideas. We see that yes, it has been slow in terms of the from Monday onwards. It's been really slow with all kind of movements, with all kind of pairs, but then that was because of the USD holiday, presidential holiday last Monday. It is this Monday, and it's picked up a lot on the PIP, so we are expecting much more. It's an Orthodox Christian holiday on Monday here. It's called Clean Monday, and it's just before, just as the fasting Lent season opens. So it's not really going to impact the market so much because it's more dominated amongst the Russian Orthodox, the Greek and the Cypriot Orthodox, mainly the Greeks and Cypriot Orthodox. So it wouldn't actually impact the market as much. So hence the reason I'll still be doing the Monday webinar, and we shall share more trade ideas and see what's cooking on the pattern side of things. Okay, all right, guys, that's all I have for you guys today, and I would like to say a big thank you for taking the time to join this webinar today. I would like to wish you guys a very good evening and a good weekend, and see you again on Monday. Okay, and take care, guys. Thank you so much. Bye.